What's up, guys? It's Default here. I'm glad that you guys enjoyed the last video that I uploaded about using standard deviation channels on Thinkorswim. I got a lot of positive feedback saying they really enjoyed it and found it helpful, so I'm always glad to share some information. However, we didn't go into detail about using other indicators to kind of get a confirmation. So like I said, don't ever just rely on one indicator. Use as many as you can without getting too hardcore, because you can have too much data, and you can get what's called an analysis paralysis and just like be afraid to pull the trigger. So just find out what works for you. I'll kind of list like the main ones that I use. So aside from standard deviation channels, I like to use MarketCipherB, and there's some other ones, but I keep my different indicators in different tiers, and by that I mean I weight them and their data differently. So like I weight standard deviations and MarketCipherB as like tier 1. So like this data is the most important to me. Like I weight this heavier than other things that I use, like EMA clouds, weekly support and resistance, trend lines, VWAP, spider lines. These are all things that I could cover in other videos as well. And then like other things is like watching SPY and the Qs and the VIX. Like these are really good, but also you need to remember that while things and sectors tend to move together, a stock can move independent regardless of what's going on in its sector. And so that's something that I always take that data into account for sure. Like if the Qs are down, you might want to be careful buying Apple calls. However, that doesn't necessarily mean I wouldn't. It would just depend on what this other data is saying, but I would still keep that in mind. So those are the other things, but mainly I wanted to show y'all MarketCipher, because this is such a powerful tool, you guys. I mean, literally, if it's probably the most important indicator I could ever recommend to somebody, because you could use it for anything. I used it for trading crypto for a long time, and I still do. And it was created by CryptoFace, so is over here. It's expensive. I don't buy it, but if you want to, that's cool. There's a lot of extra stuff. It comes with extra indicators, little doodads, little signals and things that that's cool. But I like the free version. The free version over here, little poor man's version. It's called Fu Manchu, CipherB divergences. So that's on TradingView, and it's basically the same thing as MarketCipherB, minus a few things like blood diamonds, manipulations, and it's not going to tell you about bear and bull divergences, even though you could spot them yourself if you just do the research. And yeah, so this indicator right here is really what's called a leading indicator. A lot of people ask me about what does that mean, and it actually is pretty significant. Okay, so a leading indicator is basically something that takes like a subset of data and it corresponds with future movement. So in layman's terms, that really basically means that it could potentially predict future price action according to the data and the trend that data is showing. So for MarketCipher, or Fu Manchu, whatever you want to call it, I just refer to it as MarketCipher. Price action is dictated by money flow and momentum. Okay, so money flow is these red and green waves. Red obviously means money's flowing out. People are selling. So there's a lot of selling pressure. So with that, obviously price is going to come down. People are selling. People are getting out of the stock. People are taking profits. And the bigger the waves, you know, the harder people are selling. And inversely so with green. That means money's coming in, life's coming in. People are buying the dip, or whatever they deem necessary. But money is flowing in. So with that also, price will go up. If people are buying, there's a buying pressure increase. You know, that can cause other people to buy because they see other people buying. It's like this chain reaction that can happen both ways. But those are the two main things. But there's a lot of other little tricks to this indicator. It's very, very versatile, and I'm by no means an expert with this indicator, but I know it pretty well. There's other people out there that know it better than me. So if you want some more information on this, you know, just go search around the internet and you'll find tons of tutorial videos. And really on that note, you don't need to be an expert with this indicator. You don't need to know every single little function. You know, I mean, as long as you have a basic understanding, right? So like, you don't need to understand how the engine in your car works to operate your car, right? You know, as long as you have a basic understanding, you can get from point A to point B. You can use this indicator to become profitable, right? And not just with this indicator, that goes for the whole stock market. You know, I'm not big on fundamentals. I'm a TA guy. You know, I still take into account, like, you know, Fed announcements and stuff like that, but I'm not an overall expert at the market, but I'm profitable. So just keep that in mind, guys, and don't let it cloud your judgment. But basically, when we're looking to confirm a reversal, what would I do basically when I see, oh, bam, BAC's close to the second standard deviation, which I took a position on today. I run over here and I check MarketCipher, and I'm like, okay, check this out. This is what's called an anchor wave right here. These big blue waves are momentum waves. Okay, so what you're looking for first is like a big blue wave. These are called anchor waves, and then you want to see subsequent smaller waves after it, meaning that the momentum is reversing. It is going in the other direction, and as you can see, there's like even like a little trend line right there that's forming. So that means that it's about to reverse potentially. Don't get me wrong. There's tons of fake outs all the time, but you know, check the other time frames. Are they saying the same thing? You know, so yeah, this is so yeah, you see this right here, trigger waves coming in. There's a good chance that if you look at it with how far extended, overbought, oversold the stock is, how likely is it to return back to normal? And as you see right here, BAC did exactly that, and I got like 33% on that. You know, pretty good. I could have made more, you know, per usual, but you know, not bad. 33% scalp in just a matter of minutes is you know, I'll take that all day, every day. And the thing about this is if you want to increase, you know, your potential profit margins, you want to buy in the red and, you know, sell in the green, and inversely so if you're shorting. And you know, this is hard for a lot of people to do because you're going to start out most of the time in the negative, but that just means that you have to, you know, have to trust your analysis, and you know, instead of just jumping on the momentum bandwagon, which, you know, I'm guilty of doing that. I do that all the time. But some of my best moves have been when I saw a potential reversal coming and I bought, you know, and it probably still went down some, but, you know, you go walk away from the computer, go drink a cup of coffee, whatever, and, you know, set your stop losses for whatever you feel comfortable with, in case you're wrong, because that does happen. You get faked out all the time. I mean, look at this Walmart. the other day I wanted to short this so bad. It was like 4 standard deviations away, but guess what? I would have been wrong because it kept going up because of whatever economic news was happening. So TA doesn't dictate everything. You got to remember that, guys. These trigger waves are very important after that anchor wave, and I'll give you a few other proof of concepts here. Neo, okay. Neo, what did I make of Neo today? Just made a quick 15% shorting when it was up here on the second standard deviation. Went over here, MarketCipher printed what's these little red dots here. These are like these basically sell signals, and same thing with the green, little buy signals. Check the other time frames because they can be dangerous on the 1 minute. People also been asking about, why using 1 minute, and that's crazy. Well, sometimes I'm only in trades for like 30 seconds. So a 1 minute, 1 day chart setup works for me. If you're swinging, I would not advise looking at the 1 minute at all. So it all depends on what you're doing, and and that works for me. TSM. Oh man, TSM, I missed out big on this today. Big reversal, got about 20%, but I only shorted like this little tiny leg right here, and I got out. And I know people that have made like probably 100% easy. They just kept going, and you see, the anchor wave right here. Boom, trigger wave, smaller wave, and then just dumps. Big red dot dumps, money flow going out, people selling, people taking profits after this big run up. Look at this run up. Oh, it's coming back down. And I think last for the day, I thought it was done for the trading for the day. I grabbed some Intel puts. It was off that second standard deviation above, and made a quick little 11%, and I hit 4 for 4 today simply off of reversal plays with using like these 2 indicators, and I really didn't look at the VIX or SPY that much today, and I was done before lunchtime. My cash account, no more settled funds, so I was done. Went and did my own thing, and you got to know when to walk away. And when you're on a hot streak, you got to be careful to keep your psych levels in check too, because you can get overconfident and then start not doing confirmations. So we got a lot cooking right now. We working on some stuff. I don't want to give up too much information, but we are working on some stuff to automate this process, maybe make it easier. So keep an eye out for that. If this was helpful, drop a like and subscribe, because I'm going to be putting out more and more content as time goes on. And just the levels don't lie, fellas. I don't know how many times I got to say it. The levels don't lie. Stay frosty.